Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Wednesday, September the 10th, 2025, recording this in the morning. Okay, let's have a quick look overnight what we got. We got a little bit of kind of like a geopolitical thing, I guess we could say. There was some talk in Poland that Polish airspace had been violated by a bunch of sort of Russian drones. Now, it's not being taken as an attack at any point, but having said that, Prime Minister Tusk of Poland has referred it to NATO, just sort of discussing it, the so-called Article 4, where they're sort of trying to figure out what's going on here. So there's definitely a bit of a ratcheting up of tension. And essentially on that news, you see here gold which has been very powerful. Let's just actually look at the chart here of gold. Now, I mean, just if you want to do some kind of sort of Fibonacci extended move here, like an extension where it might sort of end up. Obviously, gold has broken out of the sideways range. We all know that. But what's interesting is that you see here yesterday gave up just a little bit, but immediately bought on the dip here. Now, whether that's something to do with the sort of the safe haven, some of those tensions over in sort of Eastern Europe in Polish airspace there. But what you can see here is that even if you do a very simple sort of price extension here, we're talking that this could definitely extend up into late 38s, 3900, even up to 4000 at some point. It's certainly not beyond the realms of possibility. So gold, very, very strong. Any dip seems to be being bought at this point. And if we just, while we're here, just have a quick look at silver. Not actually as strong, but just in a nice little sideways consolidation here. And you've got to say, if gold continues to perform and keeps on sort of ripping higher and higher, at a certain point, it's quite possible that silver will follow that as well. So let's just watch this little sort of sideways consolidation. And as I say, if is building bullishly, and if gold continues higher, I would expect a little bit of a breakout on silver as well, maybe testing up towards this $44 level, which is sort of is a bit of a sort of overhead resistance. That would be an attractive target there. Now, just going back to the Polish thing. So if we look at that, what we saw is that the German bunds, they had a little bit of a pop. They've subsequently given it back. But if we actually look here at the German bunds, you can see here on this daily chart here that, overall, they have been sort of grinding down, but they did get a pop overnight. But they've, as I said, they've given that back up because it doesn't look as though there's any kind of escalation in Poland. Let's hope not, unless the Russians do something. So that's that. Just while we're on the German bonds here, looking at what's happening in France, we know that a couple of days ago, Bayrou's government sort of fell, and now it looks as though Macron is appointing sort of another sort of a prime minister. But the chances of sort of fiscal consolidation don't look great. So probably there's going to be sort of grinding demonstrations and whatnot going on in France. And overall, that's just going to put can keep pressure on the spread between Germany and France. So you see here the French-German spread, about 82, 83 basis points. That's the gap after the resignation here. So it's probably going to be contained there just for the moment. Let's keep an eye on that. In terms of other stuff happening, just looking at some of the currencies, interesting to keep an eye here on the euro. Again, with the incident in Poland, I'm not saying it's that, but the euro just under a little bit of pressure here. And also that's probably going to be reflected in something like euro Swiss franc. Obviously, the Swiss franc is the sort of the safe haven, so to speak, of Europe. So you can see here that the euro under a little bit of pressure against the Swiss franc. So that's a couple of things to keep an eye on. In terms of what's going on today, well, overnight, yesterday, let's first of all have a look at Oracle, because Oracle had very strong sort of market reaction, up about 29, 30% here. You can see in the post market, look at this, a pretty crazy move here. And it's not so much because their metrics were great, but basically the forward guidance was very, very positive, up about 32%. I mean, that's an extraordinary move for a company of this sort of market cap. But Oracle up 32% based on the idea of very strong forward growth. So today, is that going to sort of impact a Nasdaq in a positive way? Let's see if that holds, or whether it's be logical for Oracle to give back a little something. Let's keep an eye on that. But looking just where we're at with the Nasdaq trading very well. I mean, at this point, trading along its highs. Absolutely zero sort of negative about this chart. If we just throw a few moving averages on here, you can see that we're trading, it's been difficult. It's only touched maybe the 50-day moving average once in the last couple of months or so, but basically it's been hovering above the 20-day moving average and well above that now. So this is still a very strong technical chart. And with Oracle, that's probably just going to add a little bit of fuel to the fire. There's no reason why that can't continue higher. ES, similar kind of situation here, not quite as strong. Where's the ES? Let's just bring up the ES. But again, similar situation here. Actually hasn't even touched the 50-day moving average, still grinding higher and higher and higher. What is interesting, though, is that something like the Russell slightly underperforming. You see here, just not quite there. But still, this is still a strong chart. If we look at the Mag 7 ETF, very strong. The equal weight, of course, is a little bit underperforming. So, but we're just quibbling because at this point, we have to say the US stock market is performing strongly. There's technically nothing in the charts to signal a short at this point. And again, you're starting to see a lot of commentators and people on Twitter and everyone saying, "Oh, it's reached the top." But the reality is, it looks as though the Fed will be cutting. The labor market, does seem to be weakening. But still seems to be relatively robust. But we're going to get a bit more information. So that brings us to what happens today, and we'll get some hard data. We'll get the first of the inflation numbers today. So let's have a quick look. Slightly unusually, normally it's the PPI which comes second to CPI, but today actually it's the PPI first. And as you can see, what is expected here is the month-over-month headline number. It's actually expected to attenuate a little bit. It was 0.9 increase last time around, expected to come down to 0.3. If you look at excluding food and energy month-over-month, again, that's also 0.3. So they're the important numbers here. So the reality is if you annualize that, you're saying, oh, that's a handle greater than 3.5, 3.6% or so. And surely that's terrible because the Fed has an inflation mandate of about 2%. But the point here is that it seems as though the market is looking through that to a certain degree. And it looks as though the market is essentially saying that, some kind of inflation of around about, mid twos to late twos is probable and indeed is acceptable. And the idea here is that if indeed the market if the economy does slow down and the labor market, the employment situation does slow down, that will be deflationary in some sense. So, everything will sort of come down in terms of prices as well. Yeah, just looking here, the headlines here, you see Oracle shares rise 30% after companies blow out revenue outlook. Indeed, indeed, indeed. Inditex's Zara rises. Okay, so Zara's had a good start. Now we saw also late yesterday, Trump's attempt to fire Governor Lisa Cook. As we say here, a judge basically put that on hold and said for the moment there wasn't enough reason, there wasn't sort of there wasn't cause enough for Trump to fire. So obviously the White House will probably sort of appeal that meeting. But that means essentially that Lisa Cook will probably be a voter, an active voter on the Fed's meeting next week. I don't think it's necessarily going to swing things one way or another. But certainly, I don't think she'll be doing the bidding of Trump. Let's just put it that way. So at this point, on the other hand, it looks as though one of Trump's nominees, Stephen Miran, will be confirmed in time for that. So maybe they sort of cancel each other out. Lisa Cook stays for the time being, and Stephen Miran joins the sort of the voters. But again, the market is pricing in. If we just have a quick look, the market is pricing in. Basically a cut here, so 27 basis points, so about 2 basis points over the 25 basis points. So that's fully priced in. That would be a major shock. Could this PPI today and then the CPI tomorrow, could that derail that? I don't think so. I think potentially what you're looking for here is maybe just an attenuation of the dovishness, because if we go all the way out to if we go out to December here, you can see 2.7 cuts. I do believe it's not so much the September pricing, but maybe more the December pricing, which could be sort of softened a little bit dovishly. Let's say hawkishly. I mean, if the data comes in a bit hot today, this could go from 2.7 cuts maybe down to 2.5, 2.4, and instead of having 67 basis points priced in by the end of the year, I think there's it's absolutely possible if we get hot PPI and hot CPI for this to come into, let's say, 60 basis points. So I definitely think there's a possibility of a slightly less dovish pricing. Now, what happens if PPI comes in lower than expected and CPI comes in lower than expected? Just keep in mind that sort of historically, I was looking at something yesterday, some research. Historically, if the PPI if the headline number and the core number are both in the same direction, so sort of hot or cool, that generally has been a good forecast for the CPI when the PPI comes in first. So we can extrapolate from that. So that's when it's mixed, of course, that's a little bit more difficult. So today, if it's in one direction, as I say, the headline number and the core number, we can probably extrapolate that the CPI tomorrow will be that way, and I think the market will go with that. And as I say, it's probably a few basis points, but I don't think the overall sort of situation for a September cut will be called into question. The other things we have today, we do have a 5-year auction for the bonds. The bond auction yesterday for the 3-year actually went pretty well, pretty strong foreign demand as well. So just looking at some of these markets here, if we just look at, let's say, the yield, just want to have a look at the yield of where's my 2-year? Right. So if you look at something like the 2-year yield here, which we had yesterday, the yield actually did push up a little bit, even despite the strong bond auctions. But again, we're coming off a pretty sort of substantial drop in the yields, and there is a little bit of resistance here. There's sort of some kind of, well, I should say support. Actually, there's kind of like a bit of support around about this level. So probably at this point, for the yields to have another drop downwards, would have to see, the cutting cycle beginning and maybe the softening in real economy data. So for the moment, the 2-year yield is happy around about this sort of 3.5% level. That could change a little bit. I don't think the bond auction today will particularly change that. The PPI will obviously get that. Just in terms of the curve, interesting, always keep an eye on the curve. If we look at something like the 2s, 30s, it has been flattening a little bit of steepening today, just as we go into the PPI data. But basically, a lot of this steepening, it's sort of come off a little bit. It's been flattening a little bit, just in the idea here that the U.S. economy maybe is slowing down. Maybe the labor market is actually weakening a little bit. That's just causing a little bit of a bid to more of the long end here. Let's see if that is confirmed. We looked at gold, just oil. Again, oil was a beneficiary of some of the headlines. Obviously, we had the Israelis attacking some of the Hamas sort of leadership and negotiating team in Qatar. Qatar was very unhappy about that, threatening retaliation and very, upset, etc., etc. But basically, the possibility of some sort of wider escalation of war in the Middle East is not good for oil supply. So obviously, oil getting a bit of a bounce on that possibly, and in conjunction, probably more to the point, the fact that Russian drones did violate the airspace of Poland is a worrying development potentially, and so just geopolitical risk probably part of this oil. Again, oil has a lot of resistance here. You see here we've got the 150 and the 20-day moving average. So I think oil really to rip higher, it would probably at this point take some significant geopolitical event, because I think the fundamentals of supply and demand are relatively balanced at this point. And so I think a trade range of, about 61, you see here about, 61, 61.50, up maybe $2, $3, $4 up to here, let's say 64, 65 is probably reasonable for oil just at this point. Okay, guys, so I'm going to let it go there. As I say, we do have the PPI data this morning at 8:30. That's going to be pretty interesting to see the market reaction. No doubt Trump will be reacting to the Lisa Cook, the temporary sort of stay by the judge, so she can sort of stay at the Fed for the time being. And we'll see if there's any more political developments in Eastern Europe or the Middle East. Indeed. Okay, take care. Have a great day, and we'll keep this going tomorrow. Thank you.